All right, today we're going to decode one of the most powerful and honestly most secretive languages on the entire planet, the language of the U.S. Federal Reserve. Now, their statements can look super dry, but hidden inside are these tiny little clues that can move trillions of dollars. Let's figure out how.
It sounds like a total exaggeration, right? But I'm telling you, it's not. The simple act of adding, removing, or just swapping out a single word in a press release can send markets absolutely soaring or send them plunging. So today, we're going to pull back the curtain and show you exactly how this whole thing works. So first off, why? Why do these words carry so much weight? Well, it all boils down to the fact that the Federal Reserve, they basically control the country's money supply. So every investor, every CEO, every world leader, they're all trying to guess what the Fed's next move is going to be. And the only clues they get are in the incredibly carefully chosen words of these official statements.
You know, think about it like this. If you get a text from someone that just says, okay, with a period, it feels way different from a simple K, right? One feels pretty neutral, but the other one, it feels cold. You immediately start analyzing the subtext, trying to figure out what's really going on. Well, analysts do the exact same thing with the Fed's statements, just on a scale that involves billions and billions of dollars.
And you know, Mark Twain had this quote that just absolutely nails it. For the Fed, there are no almost right words. Every single phrase is chosen with surgical precision. And for the financial markets, that precision can be the difference between a harmless little flicker and a massive bolt of lightning.
Okay, so what is this all-powerful document we're talking about? It all comes down to the official statement that gets released right after each of the Fed's big meetings.
The people writing this thing are the Federal Open Market Committee, or what everyone just calls the FOMC. This is the group that's responsible for setting the nation's key interest rates, which, believe me, affects everything from your car loan to the health of the entire global economy.
So after they meet, they put out this pretty short statement. It basically summarizes how they see the economy, it explains the decision they just made about interest rates, and, this is the most important part, it drops these subtle hints about what they might do next. That last part, that's why everyone is reading so closely.
So, you might be wondering, how do the pros find that hidden message in this sea of dense economic language and find it instantly? Well, it's a surprisingly simple but an incredibly powerful technique.
The secret, and it's so simple you're gonna love this, is comparison. Nobody, and I mean nobody, reads the new statement in a vacuum. The very first thing every analyst, every journalist does is they put the new statement right next to the one from the previous meeting to see exactly what's different. This whole process is often called redlining. And this right here, this is exactly what that comparison looks like in practice. You can see how the text has been edited from one statement to the next. The phrase, job gains have been robust, was just gone. It was completely removed. And the old language, that risks appear roughly balanced, that got replaced with a brand new warning that some risks to the outlook have emerged. I mean, just that one change. It's a massive signal that the Fed is starting to see things very differently. And this is the code you need to know. The black text, that's the stuff that's the same as last time, basically old news. The real focus is always on what's been added in red. And just as important, what's been crossed out. That's what tells you how the Fed's thinking has actually evolved.
Okay, so you've spotted the changes. Now what? How does an analyst turn these little highlighted edits into a real prediction about the future of the economy?
Well, there's a pretty methodical 4-step process they use. First, you isolate every single change. Second, you figure out the direction. Is the new language hawkish, meaning they're getting tougher on inflation? Or is it dovish, meaning they're more worried about economic growth? Third, you have to analyze why. Why did they make this change right now? And finally, you predict how the market's going to react to all of it. Let's look at some classic examples. Think of it like a decoder ring for Fed speak. If they downgrade their description of growth from strong to solid, that could mean the economy is starting to cool off. If they remove the word patience, that's a famous signal that they're getting ready to make a move on interest rates. And if they add a phrase like closely monitoring, that tells the market, hey, we're worried about something new over here. Every little change is a clue.
All right, so this is where it gets really fascinating. How do these tiny little tweaks in language actually lead to massive real-world consequences?
It's because based on these interpretations, these really smart, educated guesses about what the Fed's going to do next, traders in these huge investment funds will start moving literally trillions of dollars in stocks, bonds, and currencies.
sometimes in just a matter of minutes.
But look, this is not just some high finance game that only affects Wall Street. The Fed's language has a direct impact on your life. A more hawkish tone could lead to higher mortgage rates. A sudden dovish shift could give your 401k a nice boost. The Fed's words ripple through the entire economy, affecting everything from home loans to the job market. And if there's one thing to remember from all of this, it's this. For people who watch the Fed, the current state of the economy is actually less important than how the Fed's perception of the economy is changing. It is all about the difference between what was said before and what is being said now.
So from now on, whenever you hear that the Fed has dropped a news statement, you'll know the real story isn't just in the words they use, but in the words they change. Which kind of leaves us with one last big question to think about. If our entire global economy hangs on the subtle choice of a single adjective, what does that really tell us about the power of the stories that shape our financial lives?
All right, today we're going to crack a code, the language of the Federal Reserve. And believe me, understanding this secret language is pretty much the key to seeing where the entire global economy is headed next.
I know it sounds a little over the top, right? But could one single word from the most powerful financial institution on the planet actually move trillions of dollars? Well, the answer is a resounding yes. And honestly, it happens way more often than you'd think. Okay, so take a look at this. On the left, you've got a Fed statement from 1 month. On the right, the very next one. The only, and I mean only, difference is one little word, highly. Now, to most of us, that's nothing. But to Wall Street, that one word is a massive flashing signal that the Fed is getting way more worried about inflation and that interest rate hikes could be coming. It's one word with a world of financial difference. And that really gets to the heart of our first topic here, this idea of one word, billions of dollars, and why every single syllable from the Fed really truly matters. See, the thing is, these statements aren't just press releases. Not at all. They are incredibly fine-tuned instruments of policy. Every single phrase is debated, every adjective is chosen for a very specific reason, because the Fed knows the entire financial world is hanging on their every word. Here's a perfect example of that cause and effect in action. If the Fed suddenly adds a phrase like inflation remains elevated, it's like a warning shot fired across the bow of the market. Traders react instantly, right? They start anticipating tougher times ahead. Stock prices can drop, borrowing gets more expensive, and it's all because of just those 3 little words. So how in the world do the pros actually decipher these messages? Well, it turns out there's a systematic method they use. It's almost like a secret decoder ring for the economy, and we're about to show you how it works. So it all comes down to one single, really important document, the FOMC statement. After each of its big policy meetings, there are 8 a year, the Fed's committee releases this short summary. And this short summary, it is the single most analyzed piece of text in all of finance. It's the whole ballgame. So how do they break it down? The method they use is actually surprisingly simple, and it's something big outlets like CNBC use to show the Fed's thinking in real time. Think of it like the ultimate version of track changes in a Word document. This is exactly how they do it. They put the new statement right next to the old one, and they highlight what's been added, what's been taken out, and what stayed the same. And here's the key. What's removed is often just as telling as what's added. So, for example, if they drop a phrase like global supply chain disruptions, that's a huge signal that the Fed doesn't see that as a primary threat anymore. It's a really powerful way to watch their thinking evolve in real time. So, who exactly is hanging on every single one of these word changes? I mean, who's reading these tea leaves? Well, it's not just some niche hobby. There are entire professions that depend on getting this analysis exactly right. You've got economists, right, who are building their models of the future. You have investors and traders making split-second decisions with millions, sometimes billions of dollars on the line. Then there are the journalists trying to explain it all to the rest of us. And even other government policymakers. They all use this exact same track changes method to get an edge. Okay, so let's connect the dots here. How do these tiny edits in a document actually translate into massive market movements? And more importantly, what could that mean for you? It all happens in this simple, lightning-fast chain reaction. Step 1, the Fed changes a word or a phrase. Step 2, analysts immediately blast out alerts about a tone shift, saying the Fed is getting more aggressive or maybe more relaxed. And step 3, the markets react instantly to that new information. The whole thing happens in a flash.
And sometimes the most powerful signal of all is what they stop saying. Imagine for months, the Fed has been repeating that its policy remains restrictive, okay? Then one day, that phrase just disappears. It's gone. The market is going to read that as a huge sign that interest rate cuts are on the horizon, which could mean lower mortgage rates and cheaper loans for everybody. And they'll do that even before any official announcement is made.
So there you have it. You now have the tool. You've got the secret decoder ring. The next time the Fed speaks, you're not just going to hear the headlines. You'll actually be able to spot the track changes for yourself and see the future of the economy being written one single word at a time. So the only question left is, what word will you be watching for?